PantheonAI presents Big Money Ignites Melt-Up, Quantum Boom, Bond Yields Dip. Good morning, everyone. Welcome to the PAI Morning Briefing. I'm John, and it is June 9th, 2025. Thanks for joining us as we dive into what's shaping up to be a pretty exciting day in the markets.
And I'm Sarah. John, what a start to the day. Just looking at the quick overview, the S&P 500 is already inching higher, sitting around 6,008. And the Nasdaq's up too, nearly 0.09% at 19,591. That's a nice bounce, isn't it?
It really is, Sarah. Although the Dow's showing a slight dip, around 42,761, down about 0.06%. And even the Russell 2000 is seeing a modest gain, around 2,145. But if that doesn't get your adrenaline pumping, check out crypto. Bitcoin's holding strong at 108,075, up over 2%, and Ethereum's right there with it, up 2.4% to 2,571.
Wow, crypto's really having a moment. But what's driving all this? It sounds like a blend of cautious optimism with a few undercurrents of hesitation. Are we talking about big money making moves again?
Precisely. Large institutional investors are reportedly jumping back into U.S. stocks after a period of significant caution. DataTrek research even suggested this sentiment shift could lead to what they're calling a melt-up in the S&P 500. A melt-up isn't your typical rally, by the way. It's that exuberant surge where investors just feel there's no reason to stop buying, quickly propelling valuations into unfamiliar territory.
A melt-up, huh? That's a phrase you don't hear every day. So are these institutional players simply seizing an opportunity? Or is there something deeper happening in the broader economic landscape?
That's the million-dollar question, isn't it? It seems some of them have done the math and reckon the risks associated with current market volatility have diminished. It's almost like the market whisperer inside them is shouting, "Now's the time." And honestly, who can argue with that kind of confidence?
It's fascinating to watch. But while stocks are getting all this bullish attention, the fixed income arena seems to be telling a different story, right? Yields have actually been moving lower today across various maturities.
Yeah, that's a contrasting picture for sure. The 2-year note is at roughly 4%, down about 4.2 basis points. The 5-year is a bit over 4%, and the 10-year is near 4.479%, marking a decrease of about 3 basis points. Even the 30-year is down slightly. What do you make of that, especially with the 10-year still above some key technical levels?
It encourages a healthy debate, doesn't it? Are we approaching a point where investors might see bonds as a more attractive refuge? Or will equities continue to steal the spotlight? It's a classic tug of war.
Definitely. And not to be overshadowed by those yield movements, we're seeing some huge news in quantum computing. IonQ just made headlines by acquiring a UK quantum startup, Oxford Ionics, in a deal estimated to be over $1 billion.
$1 billion? Wow. That's a bold move, especially with big tech names like Microsoft and Alphabet already making forays into quantum research. It really reinforces the idea that we're on the cusp of major breakthroughs in that sector. It's not every day you see a company going all in on what many consider the computer technology of the future, right?
Absolutely. It really gets you thinking about how these advancements might translate into tangible market plays down the road. But moving from future tech to, well, a very different kind of strategy. EchoStar. They're reportedly exploring an unconventional move to protect themselves from governmental pressures.
Oh, you mean the bankruptcy proceedings as a tactical move? To fend off the FCC potentially revoking their licenses? That sounds almost like something out of a corporate thriller, doesn't it?
It really does, Sarah. There's certainly a hint of desperation in that approach. One might humorously wonder if EchoStar is trying to play a high-stakes game of hide-and-seek with regulation, but in high finance, sometimes your best play is indeed the wild card.
It'll be fascinating to see how regulators and investors react as that story unfolds. So let's zoom back out for a moment. What are the essential stories really making headlines on multiple fronts today?
Well, first, that repeated narrative around large institutional money shifting its stance. We've seen it reported multiple times. Big players are not only stepping in, but are clearly signaling their confidence in a sustained rally. If the titans of finance are on the offensive, there's a reason to pay attention, right?
Right. They're usually the ones with the resources to weather any storm and capitalize on opportunity. And then there's the steady, if slightly cautious, movement in bond yields. Some might say lower yields indicate a flight to safety, but others argue it's just normal market adjustments ahead of upcoming Treasury auctions this week.
Exactly. Those auctions will feature varied maturities, including 10-year and 30-year notes. It implies the government is fine-tuning its debt issuance. It's almost as if the yield curve is engaging in its own subtle dance, leaning one way then the other.
I love that analogy. And moving back into the tech and innovation realm, IonQ's acquisition isn't just a one-off headline. It represents a tangible commitment to the future of computing. Quantum computing may still be in its developmental stages for most, but strategic investments like these could soon accelerate its journey from experimental labs to mainstream applications.
Absolutely. The potential for such technology to revolutionize data processing, risk analysis, even financial modeling is enormous. It's a gentle reminder of how breakthrough technologies can alter the landscape in unexpected ways, much like the internet did decades ago. Could quantum computing eventually be used to optimize trading algorithms in real time? That's a thought worth mulling over.
That really is. And let's not overlook fixed income and the signals it sends us. The downward movement in yields, particularly with the 10-year note remaining above technical levels, invites further conversations about monetary policy and investor behavior. Is it a subtle message of economic uncertainty or just cyclical adjustment?
I like to think of it like a seesaw, Sarah. When one end dips, the other rises, inviting both caution and opportunity in equal measure. It certainly keeps me on my toes, and hopefully it keeps our listeners engaged as well.
It absolutely does. On the sector analysis front, today's market narrative really spans multiple industries. In tech, we have that quantum computing play, which underscores the ongoing race for innovation.
And it reminds us that tech isn't just about smartphones anymore. It's about the very foundations of computational capability. In energy, we're starting to see interesting signals in how global oil prices and renewable initiatives are interacting, especially with geopolitical tensions.
And in finance, aside from the clear short-term volatility exhibited by stock indexes and bonds, there's also the broader issue of regulatory oversight, a theme clearly underlined by EchoStar's current maneuvering. These moves are emblematic of companies navigating both market forces and government regulations.
They really tell a story of a sector that's as resilient as it is resourceful. Broadening our lens to global market implications, you can't help but notice how interconnected today's markets are. The optimistic moves in U.S. stocks might have ripple effects across European and Asian markets, influencing capital flows elsewhere.
And while some view this global interdependence with caution, others see it as a breeding ground for opportunity. International investors looking for yield might start reallocating assets between equities and fixed income across borders. It conjures up some thought-provoking questions. How will emerging markets react if the U.S. continues on this break and accelerate path?
Exactly. And could this interplay eventually lead to more synchronized global growth? Or will it instead reveal cracks in the interconnected system? These are the kind of questions that keep analysts like myself burning the midnight oil. Sometimes literally when the markets are that engaging.
Speaking of burning the midnight oil, what are your expert insights and predictions for the weeks ahead, John? Today's movements, moderate gains in stocks, subtle declines in yields, bullish sentiment from big money. What does it all suggest?
To me, it suggests a period of potential transition. We might be seeing the quiet before a storm, or the build-up to the next phase in market sentiment. If institutional investors continue to pile into equities, we could be on the cusp of a broader market rally. But on the other hand, if bond yields continue to decline and become more attractive, we might see a flight back into fixed income. It's a delicate balance, and diversification is key.
You know, you have to laugh a little at the irony of it all, don't you? Just when you think you've got the markets all figured out, a new headline pops up like a surprise guest at a party. Take EchoStar's strategy, for instance. It's like they're saying, if you can't beat the regulators, file for bankruptcy and beat them at their own game.
Right? Of course, in the high-stakes arena of corporate strategy, such moves are anything but humorous on the surface, yet there's a certain absurdity that can't be ignored. And then, when you shift your gaze to something as futuristic as quantum computing, you start to wonder if we're all just living in a sci-fi narrative that unfolds one headline at a time.
It really is. It's moments like these that add a bit of levity to the relentless analyses and help remind us that while money may be serious business, it's also full of surprises that make the journey all the more fascinating. Let's delve a bit deeper into some of those sector specifics.
Sure. In technology, IonQ's acquisition of Oxford Ionics reminds us that innovation is the lifeblood of the sector. The quantum computing realm is not only attracting headlines but also significant capital. As an analyst, I often compare these investments to planting seeds in a garden. They're all paving the way for future growth.
That's a great analogy. And in the energy sector, while none of today's headlines focus solely on oil prices or renewables, the global context cannot be ignored. There's chatter about how geopolitical tensions and supply chain disruptions might affect energy markets. It's a bit like watching a game of chess, where each move by a distant opponent could be the catalyst for your next move.
And sometimes, those distant moves come with a punchline, almost as if the market is reminding us that while energy is serious business, even the most intense game can have moments of unexpected humor. Turning to finance, the market's current behavior, a subtle mix of optimism in equities and hesitance in fixed income, provides a rich tapestry for analysis.
On one hand, the bullish stance of large institutional investors is a signal of confidence. On the other, the slight declines in bond yields offer an opportunity for those who prefer more stable, predictable returns. It makes you ask, is this a tug-of-war between risk-on equities and risk-off bonds, or a delicate balancing act?
For traders and portfolio managers alike, these questions are more than academic. They're central to crafting strategies that can weather diverse market conditions. And as we step back and look at the global market implications, it's clear that today's moves are far-reaching. The confidence among institutional investors in U.S. stocks isn't happening in isolation.
Exactly. It's being closely watched by markets in Europe and Asia. If U.S. equities see a sustained rally, we might witness corresponding rallies elsewhere. Conversely, if bond yields continue to slide, emerging markets could be impacted by capital outflows. This interconnectedness reinforces the idea that no market exists in a vacuum.
Every decision, from quantum computing investments in the UK to regulatory maneuvers in the US, sets off ripples in a vast, interlaced network of global finance. In forming expert insights and predictions, one must always consider both the visible signals and the subtle undercurrents. The bullish sentiment and slight tweaks in yield levels suggest we are at an inflection point.
Perhaps we are on the brink of a phase where market participants grow more confident in their long-term outlook. Yet, caution remains the watchword. History teaches us that markets can shift abruptly, and what appears to be a gradual buildup can swiftly turn into a more dramatic adjustment.
It's this inherent volatility that calls for both vigilance and a strategic approach to investing. And, I'd be remiss not to inject a bit of humor into our analysis. Sometimes I think the market has a personality. Some days it's like that friend who shows up on time with a great story. And on other days, it's the one who cancels plans at the last minute.
It's a bit like planning a barbecue only to have the weather throw a curveball. But if you learn to appreciate those unexpected shifts, you might just find the unpredictability to be part of what makes investing such an exhilarating ride.
Absolutely. Before we wrap up today's briefing, let's reflect on a few key stories and what they mean. First, that consistent theme of major institutional money turning its gaze back toward U.S. equities points to a collective shift in market perception. It's a signal that those who control vast sums of money are recalibrating their risk tolerance.
And then, there's the story of lower yields in the bond market, which is quietly suggesting that fixed income might become more attractive for those seeking stability, as the equity markets flirt with potential volatility. With the 10-year note still hovering above technical levels, it's a gentle reminder that even small shifts can create ripple effects.
In the technology aisle, IonQ's strategic acquisition serves as both a bold statement and a harbinger of things to come. It's a clear signal that while today's innovations may seem like science fiction, tomorrow they could become the backbone of modern business operations. And then there's EchoStar's unconventional approach, a reminder that sometimes the boldest moves challenge the status quo.
Even if they walk a fine line between genius and risk. So, to recap our key takeaways, keep an eye on those big institutional players. They often provide clues about future market direction. The interplay between equities and fixed income signals that diversification remains essential. And groundbreaking moves in sectors like technology indicate the future is being written now.
And finally, the global interconnectedness reinforces the idea that every move resonates far beyond its immediate context. Before we sign off, let's toss a few thought-provoking questions your way. Do you think the bullish sentiment from big money will continue to fuel a melt-up in the S&P 500? Or could we be nearing a point where risk reverses?
And could the bold strategic moves in the tech sector like IonQ's acquisition set a precedent for further radical investments, or are we witnessing an isolated case of aggressive expansion? And finally, how do you plan to navigate this delicate balance between risk and opportunity?
These are the sorts of questions we encourage you to mull over, and we're always eager to hear your insights. Investing is as much about asking the right questions as it is finding the perfect trade. Feel free to reach out with your thoughts, challenges, or even a funny story about your own market misadventures.
You never know, your perspective might just spark someone else's big idea. As we conclude today's briefing, remember that PantheonAI is here to be your information copilot, guiding you through the twists and turns of the market with a steady hand and a keen eye for detail.
Our goal is to equip you with not just data, but the context and insights needed to make informed decisions in an ever-changing financial landscape. Tomorrow's episode promises fresh news, deeper dives, and of course, more engaging conversations that will help us all navigate the dynamic world of finance.
Thank you for tuning in this morning, and we hope you found today's discussion as enlightening as it was entertaining. Remember, learning shouldn't feel like a full-time job.
We look forward to having you back for the next episode tomorrow, and as always, feel free to ask questions to our AI copilot at any time. Until then, keep your strategies sharp, your humor intact, and your curiosity ever burning bright. Have a fantastic day and happy investing.
PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.